fragmentation in the AI infrastructure market and some of the major players and how we see the market today. Groups buying AI infrastructure, how we see hyperscalers as a threat to NVIDIA, and some divergence in OEM strategies and how they're approaching these different markets. So as Haley mentioned on the webinar today, you have myself, Angela Lambert, and Ben Carbonneau. We lead up TBR's coverage of OEMs, and we're looking forward to this conversation. So why don't we go ahead and dive in? First, as we talk about the fragmentation of the market and evolution by customer group, I think maybe to start out looking at kind of the market growth thus far, Ben, how about you kind of give us a little bit of context on our market growth here, and then we can kind of jump into what's changing.
Sure. Yeah, thanks, Angela. So as you can see, the market is expected to grow in total at a pretty steep rate, above 30% there in 2026. And that's due just to an ongoing initial build out customer groups in a second here. But before we do that, I think just some terms that we'll be referring to throughout this webinar and that you'll see on the chart in front of you. You'll see custom AI ASIC and merchant accelerator. And what we mean by merchant accelerators like GPUs made by AMD or NVIDIA that are going to be placed in the data center. It would now include also what's going to be NVIDIA's Grok 3 LPU-based LPX system, but it's really anything that runs a more standard accelerated workload, and that is something that is broadly available to the market. Kind of on the opposite side of that would be custom AI ASICs, and that's going to include these are really, we're thinking about AI accelerators here and not the ASICs for networking. So this is going to include things like AWS's Trainium-based infrastructure, and then infrastructure-based Maya accelerators and others. So those are the kind of the terms we're working with today. And then I think it's also maybe one last note to the chart is that AI server and systems, that's what's shown here. So the breakdown by merchant accelerator and then custom accelerator is what's inside the system, but the chart's composition is the revenue of the total system itself, which is important because one of the kind of key trends that we're seeing is platform and systems level innovation, co-optimization of different components of an AI infrastructure rack. So that's something that we'll touch on later. But now kind of moving back to the question Angela initially prompted, fragmentation. The market's increasingly fragmented, and what we mean by that, there's fragmentation across several different axes. I think three of the most important axes, they're all interrelated, but first I would say workload. Initially, workloads, a larger workload demand driver. And then I think what ties into the fragmentation by silicon also is really driven by the workload types. So a good distinction between merchant accelerators like GPUs versus custom cloud accelerators is the flexibility of GPUs. So because training of these large frontier models is evolving so quickly in terms of model architectures and precision formats, GPUs are really very necessary here. And it's why you see hyperscalers continuing to be kind of the main buyer group, NVIDIA, the main customer group there. And then in inference, well, merchant accelerator based are still an opportunity where hyperscalers are able to slowly kind of slot in their custom AI accelerators to power their infrastructure abstracted services, which again is something we'll talk about a little more in a second. And then the premises deployment of your AI workload, that's going to be very use case dependent, which we'll talk about when we go over kind of what we see between enterprises versus neoclouds and hyperscalers. And then for on-premise deployment, it's really going to have to do with different factors like data sovereignty requirements, data gravity, the latency sensitivity of your specific use case, as well as cost considerations. And then also just tying into the kind of the broader landscape, kind of things that challenge enterprise adoption of AI, things like data readiness, and then also the increasing complexity of this AI infrastructure.
Yeah, I think those are great points. And when I want to touch on enterprise more in a bit, but I think as you're describing, Ben, one thing that we see in our recent survey data that backs up some of what we see enterprise AI adoption as in being used in a day-to-day type of format at around 80% of enterprises who we survey in the last couple of months. I think if you looked at enterprises using their own on-prem infrastructure for new AI use cases, that's where in our data you see the numbers being significantly lower and kind of a lot more potential room to grow, depending on how things continue to fragment. But I'll put a pin in that for now, because I do want to ask you more questions about kind of the hyperscale versus neocloud and how you see that impacting infrastructure demand. So I pulled this chart from NVIDIA's earnings that just came out last week. And I think, when I look at this chart as an analyst, I see, okay, in 1Q of 2025, hyperscale was not the largest customer segment. Looking ahead a year, they are now, slightly by a small margin, NVIDIA's largest customer segment, but from just in the single quarter, increasing by $20 billion within that category. And I know you mentioned that obviously this is all really driven by fast build outs, but there's also maybe some potential threats based on the speed of that growth and how much of NVIDIA's business it now comprises. So what are your thoughts on that?
Yeah, I think hyperscaler demand obviously really big. Again, just going back to what you can see in the chart representing NVIDIA's largest end market group from their recent segmentation that they're giving here. Again, hyperscalers are really kind of supporting a lot of the frontier model training that's going on, as well as some of those AI clouds, which are grouped in there with industrial and enterprise. So I think that's what's driving the expansion there is primarily NVIDIA systems being deployed to support frontier model training, as well as increasingly inference, although I think kind of the inference workload mix is really not as big now as where it will be. There's no doubt that inference is where the long-term opportunity lies, and that's also what's driving the hyperscalers' investment in ASICs. And we look at the headline here. So obviously, that first part, NVIDIA's biggest customer group, but also NVIDIA's biggest threat. And that just couldn't be more true. And that's not only just from the perspective that they're kind of abstracting NVIDIA infrastructure and investing in their own AI managed services to allow developers to kind of interact with models through APIs and platform services rather than optimizing for direct hardware. It's that decoupling that is the infrastructure abstraction that we talk about. And that's really where I see hyperscalers being NVIDIA's largest threat. Recently, at NVIDIA GTC in March, the company talked a lot about how they view AI as kind of a 5-layer cake, with that base layer being energy, the layer up from that being chips, infrastructure in the middle, and then models and applications as the 2 layers above infrastructure. And it's really clear that where the value and the influence or the control of the AI stack lies is above the infrastructure layer. And that's why you see NVIDIA making these investments in things like AI enterprise to kind of grab hold of the enterprise workloads, while hyperscalers are, investing in the opposite direction with their AI managed services. So that's why I see, NVIDIA being really dependent on the hyperscalers as buyers, but also the hyperscalers being NVIDIA's biggest threat and being very motivated to reduce their reliance on NVIDIA. And that's something I think where the hyperscalers are positioned to do that the best versus any other industry group. And it's not only because of the massive amount of resources that they can devote to the research and development of their custom inference chips, it's also the kind of workload volume that they have. So for most companies, even if it doesn't make sense for you to create your own inference accelerator, just because you don't have the workload consistency and volume that the hyperscalers have. I think eventually, and this is what's really driving the growth of the custom ASICs portion of the market in that first chart that we showed, is hyperscalers' investments in reducing their reliance on NVIDIA.
So in that sense, would you say that a neo cloud customer would be a little more an enterprise point of view?
Yes. Okay. So that was the other part of the question that I missed there. But yeah, neoclouds I think are unique in the sense that they share characteristics of both kind of the enterprise segment as well as the hyperscalers. They're very large in the scale of infrastructure that they buy. So really large AI deployment, very aligned with NVIDIA. Very important to NVIDIA's strategy. And I think it's why you see NVIDIA's recent capital investment in CoreWeave, because the neo to invest in developing their own silicon just because of kind of the customer group that they serve, which primarily now is model developers and AI labs that are really entrenched in the kind of NVIDIA CUDA applications. So neocloud's really good for NVIDIA to kind of get more of its infrastructure out there. And by growing that install base of infrastructure, as well as maintaining its massive developer share in the accelerated application market, I think, again, that neoclouds is just a really strong vector for NVIDIA to remain dominant in AI going forward.
Got it. Okay. And I think as part of this, just looking at the customer segments on the slide here, I think circling back to enterprise, this one I think is an area too where we also see a lot of adoption being very uneven. So even fragmentation within enterprise, I think you see some verticals that are already really strong much beyond the adoption of knowledge-based apps. So I think that that'll be kind of another dynamic to look at as well.
Yeah, definitely. I think the enterprise, that opportunity, and we'll tie into this later when we go over kind of the winners and losers of the OEMs. The enterprise opportunity is really what the OEMs want. It's what NVIDIA wants. But I think it's important to look at the enterprise AI opportunity through that lens of fragmentation of on-premises and cloud deployment. And to what Angela was saying earlier, citing our customer research, obviously the majority of enterprises are using some sort of AI solution right now, but we haven't seen on-premises AI deployments really kind of gain that traction that maybe a year ago we thought they would. And I think that's really because of the use cases. And seconding again what Angela said earlier is the uneven adoption across different industry verticals. So obviously in healthcare and life sciences, perhaps the largest adopter of kind of these on-premises AI solutions today. There's definitely some adoption in industrial and manufacturing as well. But most organizations are using cloud-based AI in the form of chatbots, whether those are customized kind of RAG implementations or just a standard enterprise license of something like ChatGPT. That's mostly what we're seeing. And of course, this kind of compute is running primarily in the cloud today. So over time, again, going back to those drivers of on-premise adoption, I think it really has to do with new AI use cases coming out, and then kind of the data gravity, latency sensitivity, and cost considerations that we talked about earlier. And a big change kind of on the horizon that we see. Obviously, the industry's been talking about agentic AI for some time now, but I think really with OpenClaw and now NVIDIA's NemoClaw framework, OpenShell, I think agentic AI is really going to start to gain meaningful momentum. And with agentic AI, I think that's when we start to see maybe more on-premises and edge deployments. Obviously, that's going to drive increased token demand. So something that's good for NVIDIA, that's good for the hyperscalers. But I guess it'll go back again to those AI managed services. Are the hyperscalers going to be able to put together agentic AI services that enterprises are going to gravitate toward, or are some of these solutions built around platforms from NVIDIA like NemoClaw going to prevail, run locally as it aligns with kind of some of these really powerful desktops that we've been seeing for local AI. And I think that ties it again back to tokenization, or token economics, I guess is maybe a better word, where it's really about driving down the cost of tokens, especially as token production increases with agentic AI. And I think clearly running some of these more complex agentic solutions locally is going to be cost saving versus running it in the cloud.
Yes, I think that's a perfect transition, really, to jump us to the next slide, because I think what you're outlining are, there's, I think, a lot of still unfurling dynamics here, is basically, I think, what I'm hearing that are ultimately going to influence some of the winning strategies going forward. So with agentic AI and token economics being a huge part of, I think what will unfold. So with that, and kind of thinking about winning strategies, then I think with the context you've shared so far, I mean, what we've seen largely through, the market size data and what you've talked through is that hyperscalers and then neoclouds are have really been the bulk of what we've seen in terms of spending to date within the AI infrastructure market. And I think when you look at the market share of the vendors who support that infrastructure demand, so the vendors that are, pieces of the forecast you were speaking to a few minutes ago, you really see that Dell Technologies and Supermicro very clearly, in terms of the service provider demand, obviously have aggressively captured that space. Probably a surprise to no one at this point that's the case. But I think the winning strategies there have been clear in terms of close alignment with NVIDIA, being really aggressive on roadmap and bringing those rack scale solutions forward. I think that part of the market is relatively established, and the book's kind of closed on that. But as we're talking about, there's more enterprise opportunity potentially in the future here. So then maybe some of your thoughts on maybe the current picture in terms of what we see today versus maybe a couple of vendor callouts in terms of other strategies that I think, as we see this market continue to evolve and fragment, I think that also means opportunities elsewhere. So any thoughts to share on that?
Sure, yeah. I guess a couple top of mind thoughts here is really just the kind of different roles that some of these OEMs play in the market. Supermicro has always kind of towed the line more toward ODM, serving really high volume customers and service providers, whereas the other vendors, specifically HP and Dell on this chart, have always been a little bit more concentrated on the enterprise market. But obviously, to what Andrew's saying, Dell really leaning into service providers and is the reason for their massive growth. What I think differentiates Dell and Supermicro is really kind of their enterprise AI opportunity in the future, where Dell obviously having strength with an enterprise install base as well as strong services capabilities, going to probably succeed to a much higher degree than Supermicro, who's building out its services capabilities, but are more in their infancy. I think it also has to do with just general perception, where Dell obviously perceived as strong in services, as well as HPE, whose strategy I think differs the most from Dell. I think initially when this kind of demand started ramping for these accelerated systems, HPE was a little bit more interested initially in service provider and AI model builder deals, and it was shown in their margins. So obviously these deals being really large scale are very margin dilutive. So Dell's taken a hit at the gross margin level. HPE took a hit at the gross margin level, but has now been a lot more selective about the deals it's engaging in, focusing more on enterprise and sovereign customers. And I think that's something that's helped the company kind of bring back its margins from that trough when it initially served service providers, and is something that's protecting the company's margins now relative to a company like Dell, specifically in infrastructure. But it's also something that's limited the company's growth potential. So that's kind of what I see as maybe the big takeaways in the difference in strategy. It really kind of boils down to is the OEM prioritizing revenue scale over profit margin, and I think over time, as scaling happens, there will be a tipping point when even if you're taking these very low gross margin deals, you just get to such a scale that your operating margin starts to grow. So there is a break even kind of point there. I just don't think that is in the maybe near future. I think the scale has to be very big for that to happen. So it's interesting just seeing these two different strategies kind of at play today.
I agree, and I think with with Dell Tech World happening last week, there was certainly very impressive portfolio breadth, and I think there was a message there that Dell has attained such scale in its AI business thus far, and that it is kind of the go-to infrastructure provider, enterprises included. On the other hand, compared to some peers, could you make the case that they're so focused on infrastructure? I saw much less services commentary than I maybe would have expected in the past. Granted, I think a great coverage and perspective on partners and partner services and the overall partner ecosystem. But when you look at the enterprise, traditionally you see much more solutions-led approach from the OEMs, and I think that we may also start to see some differences there. And it should, I think, networking might be another interesting piece coming up. Obviously, HP has done significant acquisition in that space. It's maybe one of the most complex layers within enterprise IT. So that may potentially change as well in terms of where we see different, I guess, segmentation within leadership as well.
For sure, yeah. I see networking being a real strong suit of HP's, especially after June 1st. Also a foot in the door to some of these deals, kind of echoing what you're saying about the complexity of networking, especially as we think about kind of an organization's on-premise data center turning from traditional infrastructure heavy to including more of this accelerated infrastructure. So something to look at for HP, and then maybe just thinking about peripheral players and opportunities kind of that are more, I guess, centered around pillars of the IT infrastructure stack that aren't compute. What do we see kind of in storage maybe?
So I think that's a great point. So on the chart here, very much missing from this would be some of the major enterprise storage players you'd expect to see. I think that my expectation for Dell, but also companies like Everpure, is that we're going to see a repeat strategy here where there's share to be gained in the hyperscaler service provider market, and that ultimately will potentially lead to more opportunity within the enterprise space. I think Everpure is a great example of that. They have been focused on this for years, for example, in their relationship with Meta and how they've built out high performance and AI storage. I think you're going to see more of a capabilities developed in investing in these large relationships that then ultimately can trickle down into additional benefits for enterprise customers. So I think going forward, where you see a lot of talk on and focus on the server infrastructure and the growth of that, storage is not going to equal or surpass the growth of the AI server space in the near term, but I do think that we'll certainly see more action there and more growth that will be shown on these charts in the future. Okay. So Ben, unless there's any other notes, we can. Anything else you want to tie off on this slide? I know there might be some Q&A we want to hit on as well before.
Yeah, sure. I know we're almost at time, so let's just jump in the Q&A.
Okay. Let's see. So token costs, or I'm not sure if there's an order to these or not. Okay. I'll start with the shorter one first then. Token costs are coming down, but token consumption is dramatically increasing. What's your view on the need for lightweight LLMs in this regard?
I think lightweight LLMs definitely are needed, kind of these SLMs that we hear about. domain-specific models, especially as we think about kind of an agentic AI architecture where maybe an LLM is acting as kind of more of an orchestration layer, accessing different data sources, APIs, and SLMs. I think it's really important there. I think lightweight LLMs definitely really important when we think about AI at the edge or AI running locally. So I guess in summary, yeah, we do think lightweight LLMs are going to be important going forward. But I would also admit that I am not TBR's AI model expert. We do have an AI model provider, Market Landscape, written by a colleague that can be made available if you reach out to marketing. But that's kind of high-level thoughts there.
Excellent. Okay. So I'm going to shorten this one a little bit, but I think the overarching question is, do we see neoclouds or cloud service providers going more so to ODMs versus the OEMs? Do we think that's going to accelerate as we talked about trends like ASICs and kind of how that might potentially impact NVIDIA or other players?
So the move to ASICs, obviously negative for NVIDIA. I think on the OEM ODM angle, what we see is a lot of those neoclouds going to OEMs rather than going to ODMs. Obviously, their procurement scale is big, but again, I think we have to think about the AI infrastructure market and realize that it's still really constrained in the sense that demand is far out exceeding supply. I think it also has to do with kind of interrelationship between the three vendors. If I think about kind of the silicon and AI platform provider type vendor, like an NVIDIA, and then an OEM like a Dell, I think the clearest example there is kind of the CoreWeave Dell NVIDIA situation. CoreWeave is going to continue to go to Dell. I think maybe at some point, they source from maybe another OEM or maybe like a Nebius or one of the other neoclouds goes to one of these OEMs focused on service provider. But I think the landscape is pretty set in the sense that the OEMs that are willing to serve service providers really are Dell and Supermicro, potentially maybe more so Lenovo as their AI infrastructure business grows. And then just from the ODM perspective, they continue to be really close with hyperscalers. So I think about Quanta, WeWin, these companies having these relationships with hyperscalers previously from kind of creating those, I guess you could almost call them white box traditional servers for hyperscalers, which have been something going on even before these investments in these AI custom silicon. I think ODMs continue to really be supporters of hyperscalers, and of course, hyperscalers are not customers of OEMs. And I don't foresee that being the case. I also think it's a situation where neoclouds, we think about the first part of that name, new, right? So these companies don't have the same kind of capabilities in deployment of infrastructure as a hyperscaler has. So they're going to rely a little bit more on those services capabilities that are offered by OEMs, where I know that Dell in recent earnings has really attributed a lot of its success in AI deal wins to its strong deployment services capabilities. Those capabilities, just reiterating what I said before, are things that the neoclouds are likely developing, but don't have the kind of expertise internal staff for now. So dependent on OEMs in that respect, whereas ODMs, I kind of think more of as box makers, and the hyperscalers are happy to kind of take the boxes and do more of that deployment themselves.
I think those are great points. And I think if I were just one quick add, I think we also have to consider that OEMs' relationships with hyperscalers and large service providers are going to be fundamentally different than how they serve the enterprise market as well. And they certainly do not treat those two groups the same. And I think, as we're hinting at in terms of the storage opportunity related to AI, I think that's a great example, right? So a hyperscaler might be using an OEM storage platform and some of the elements of their hardware, but they also may be leveraging the hyperscaler's own supply chain to help build those boxes. They're very unique relationships. Okay, great. So Ben, let's close off on one other question here. So maybe just so we've talked about NVIDIA as kind of the almost only silicon provider in the house aside from those custom categories. So maybe just in terms of winners, losers, we haven't mentioned AMD. So maybe what do we think in terms of kind of their opportunity going forward?
Oh yeah, okay, yeah. We should definitely mention AMD. They are in the picture. I think what we've seen, at least recently, is AMD trying its best to follow NVIDIA and then also do its best to kind of dismantle the competitive advantage and moat that NVIDIA has built with CUDA. So with respect to the latter point, investments in ROCm, the platform that essentially is really focused on kind of CUDA emulation at this point, I really don't see a lot of signs. Obviously it's getting better. I don't see a lot of signs of that kind of making it to a breakthrough area where there is complete kind of CUDA parity. So I think that's what AMD is investing in from a software angle. I don't know that I see that happening soon or maybe even ever. But where I do see AMD as being really viable is, with the introduction of their Helios rack, they're kind of following what NVIDIA's done with kind of that rack scale innovation and tight integration of components. So in that respect, definitely driving really high performance infrastructure. And I think what I've seen so far is, at least in a lot of the Helios deals that I've read about, a lot of them seem almost as a smaller and secondary source kind of driven deal to a customer who already has NVIDIA in their data center. So kind of playing that second fiddle role, I do expect AMD to kind of execute the same strategy that we've seen it execute in the CPU space, against Intel, where maybe coming in at a little bit more cost competitive rate is something that helps them gain share. And we do forecast that AMD will gain share over time in that merchant accelerator market through 2030, which is kind of our forecast period for the report that this whole webinar is based on. And then lastly, one thing I'd say is we hear a lot about agentic solutions and workloads being more CPU heavy versus GPU heavy. I think there's no question that agentic workloads increase token demand. So, assuming the same rate of token generation right now of current GPUs and CPUs, that would equate to more GPU demand as well as significantly more CPU demand. So I see that as an area where AMD is advantaged in the sense that they have a viable GPU merchant accelerator platform, as well as a strong x86 CPU market with EPYC. But conversely, NVIDIA not playing in x86, although they are closely partnered with Intel after that equity investment, I believe at the end of last year, really leaning into the ARM-based silicon on the CPU side. So maybe something that helps AMD in the future is that move to agentic solutions being a little bit more CPU heavy, kind of having that complete portfolio it's x86 based, which is unique, but really TBR's view that NVIDIA stays on top of the market for some time just due to that first market, their first mover advantage, CUDA, and their constant platform level innovation.